Quietly, this champ built a $50 billion empire by buying and selling websites. He started at the bottom, trading websites for $100 and worked his way up to bigger deals.
If you have $5,000, start with $5,000. If you are more fortunate and you have 50 million.
We uncover his money-making playbook and why now is the best time to get started.
It's probably easier in some ways because there's more exit options, like all the way from really small deals to much larger deals.
We investigate how to value a deal so that you make a guaranteed profit.
Valuation is somewhat arbitrary. The business is so small, sometimes it's literally just what the seller wants.
And he gives us a no bullshit perspective on what works and what doesn't.
When you do a deal like this, do you need all the money up front? Can you get a loan?
I think there's a lot of misinformation out there with this answer. Most people are lazy and will do a bad job of doing almost anything. So if you turn up and do a good job and you do the things you say you're going to do, you're automatically ahead of almost everybody.
Welcome to Money and Power. This is a masterclass on how to turn flipping websites into a multi-billion-dollar M&A boutique. We want to have peer-to-peer conversations. The question is how to win. Alrighty, then let's get started. Thomas, it's a pleasure to have you on.
Thanks so much for inviting me, Kevin.
I call you the billion-dollar website flipper because you started in the dorm room flipping websites, and this got bigger and bigger and bigger. And now you are in the Olymp of finance, so to say, the highest calling of mankind, M&A, with your own firm. And you just told me your total transaction volume is in 50 billion, which is absolutely massive. You guys have grown a lot. So give us the story of how you got into M&A in the first place.
Sure. So many years ago, going back to 2009, 2010, I was at college or university trying to figure out what I wanted to do next when I graduated. And back then, I discovered buying and selling websites or online businesses, tech businesses. In 2010, there was really no market for it. There was no M&A firm you could call who specialized in tech businesses. There was no way you could really find to learn about these things. So I actually started doing my very first deals on platforms like eBay, where most people today, you would not even consider selling a business on eBay. It doesn't make any sense. But back then, it was one of the only options. So I started out doing deals for myself very early on when it was literally just, like say, me in a dorm room, and then transitioned quickly to building what is now one of the biggest tech M&A firms in the world, because we pivoted and transitioned to not doing our own deals, not doing any flipping, to helping founders who have built successful 7, 8, 9, hopefully one day 10-figure businesses and want to sell them. So that's what we've been doing since. And now we have in our M&A business over 50 people. Our head office is New York, so I'm currently sat in our tower in New York at the moment. Most of our team are here. We have other people all over the world. And we work with generally founders of 8 and 9-figure tech companies to help them sell.
So I think we're going to talk about both of these things. I want to first find out how you started out with these very small deals at the very beginning of your career. And then I want to also hear about these massive deals and how you even, ended up founding such a big firm, because I think that's very interesting for many of our audience. So let's start at the very beginning. I heard stories that you bought your first website and it was worth a couple of $100 and then basically flipped it. So how did all of this get started?
Yeah, exactly. So first deal was about $100. I didn't have any, I was a student, so I didn't really have any money. So I had to use my, I would literally use my credit card back then, and I'd buy something at the beginning of the month. And back then you basically just use PayPal. So I'd buy something on my credit card at the beginning of the month, and then I had to try sell it by the end of the month. Otherwise I couldn't pay my credit card bill, basically. So that was my business model starting out. I studied business, so I always had like a business and finance background. what I figured is that people would pay a multiple of your like revenue or your earnings on a business. Back then, a lot of what people were doing was selling domains. I never understood, and I still don't really understand the domain world now, because you're just selling a name, doesn't generate any revenue. So I didn't really understand that. Whereas if you take a domain and you add like a business to it, and the business is making money, there was demand from people who wanted to buy that. So when I started out, I was essentially buying either domains or websites that were making no money, finding a way to generate some income. And it was generally really simple, like not really even a huge amount of income, packaging it in a better way, which is really something we've applied throughout our entire business. You can do $1 billion deal and $100 deal. It's very important you present it well and present it properly. It doesn't matter what you're selling. It's the same in any industry. So we started out doing that. The intention was to buy something in a month, put on the credit card by the end of the month when the bill was due, to have sold it, and then take that, hopefully more money, and buy something a bit bigger. So we'd start with $100, maybe sell it for $500. Then I would take the $500, maybe sell it for $2,000. Then maybe you take $1,000 and sell it for $3,000. So that was very early on, before Effie International, the business is today, was founded. We were doing that. So lots of small deals, learned how to sell, built up a reputation in the tech industry of kind of knowing what I was doing from that perspective. And that, I guess, gave me the platform and the ability to launch Effie International, the M&A business, which came really like a couple of years after of buying, selling very small websites myself.
Yeah. Now, some people might say, if you are, focusing, or when you start out and you buy these very small businesses, because I imagine some of our audience are interested now and thinking about doing that. Some people might say, why not just build the thing yourself, right? How much value can you really buy for $5,000? So what is your argument for why should you buy a business and not build a business? And let's start with small businesses, why you think that might make sense, but let's also talk about bigger businesses, why you think it might make sense to, actually acquire.
Yeah, I mean, I think the answer really applies to a $500 million business or a $5,000 business. Conceptually, the answer is the same. And it's really just, if you are launching a business yourself, there's a lot of, even if you're the smartest person in the world, or you've done it before, there's always a risk it won't work. So lots of businesses, I don't know the statistic off the top of my head, but the majority of businesses that are started fail within 2 or 3 years. Almost everyone understands that statistic and knows that is true. If you buy a business that is established, even if it's tiny and it's making $100 a month, you at least have some proven traction. And again, that applies to $500 million business. Maybe it's making $10 million a month. It's exactly the same thing that applies. So it's really just a shortcut. Yes, you could start it yourself. Some of it also depends a bit on your skills. I don't have any technical skills. So if you said to me 10, 15 years ago, build a website or whatever, I would have no idea how to do it. So it made more sense for me to buy something and apply my business knowledge to improve it versus launching something. I was like, yes, I am an entrepreneur, but ironically, I wasn't very entrepreneurial with ideas like that. I don't have 50 new business ideas a day. I didn't 15 years ago, and I don't today. So it's really just a shortcut. Like, yes, if you build something yourself, it's probably going to cost you less money in total dollars. But if you value your time, there's also a time value of money. So maybe that $5,000 business you start with, maybe it took 12 months for the current owner to get to the level where it is today. So you'd have to spend 12 months to essentially have something worth $5,000. Or obviously it could be a lot more successful. It could be worth 50,000, 500,000, 50 million after 12 months. I've seen over the years all sorts of different businesses after that. So really it's a case of you're accelerating your success. If you are, I guess, watching this or listening to this and you're thinking about doing it yourself, it's really just a shortcut. And then the size of business you buy is really just relative to what resources you have. I didn't grow up with kind of family money or anything like that, so I didn't know where to get money from other than my credit card at the time. So that's what I did. So I guess anyone listening, you can really start at any level. Yes, it takes time to get to 7, 8, 9, 10 figure deals if you start small, but everyone has to start somewhere. Every person who built generational wealth started with one small deal. That's the same with everybody.
Yeah. And that's a good point. So would you say there's like a threshold for when it starts making sense to buy businesses? Or you would say today in 2024, you can literally, if you want to get started, you can even do a 5K deal and can, double the value. It still makes sense.
Yeah, I don't think there's a threshold. I think it's all relative to what resources you have available. If you have $5,000, start with $5,000. If you are more fortunate and you have 50 million, start with 50 million. Everyone is different from that perspective. But yeah, it's really just you will accelerate. You are more likely to buy something that's actually successful. You don't have to worry about having any unique ideas. You just have to improve what's already there. And I personally find it easier to improve something than think about how to start something from zero. So I'm good some people are good 0 to 10, and then founders want to exit because they don't know what to do next. I'm probably good from like 10 to 1,000, and then probably beyond that, maybe not so useful. So a lot of it is you have to decide what you are good at. Some people are good with ideas. Some people are very creative and can build things. I'm not really that person. So buying businesses made sense to me.
So let's look at this space between, let's say, $1,000 to $100,000 plus minus. When you do a deal like this, do you need all the money up front? Can you get a loan? Are there some interesting deal structures that you have seen that people can apply?
So it's an interesting question. I think there's a lot of misinformation out there with this answer. I was speaking to someone on Twitter the other day because there's a lot of content saying, oh, you can buy $1 million business or a $10 million business or a $100,000 business with 5% down or something like that. The reality is the vast majority of deals happen with mostly cash. Yes, there are exceptions, but the majority are cash. Can you structure it? Yes. So again, it doesn't matter how big the business is. It could be $1 billion. It could be $100,000. You could say, okay, on the $100,000 business, my offer is 70,000 because you have 70,000 in cash, and then I'll pay you 15,000 after a year, and then another 15,000 after 2 years, based on certain things happening. So maybe that's the business growing, or maybe you as the founder helping to like train me to make sure I know what I'm doing. There's hundreds and thousands of different ways to structure that. In terms of can you get a loan, for most people, no. In the US at least, like I said, I'm English, so I'm from the UK. I now live currently in New York. In the US, you have SBA loans, and SBA is essentially a small business administration. It's a government-backed loan that you can use to buy businesses that meet certain criteria. But generally, that only works if you are a US citizen and you're buying a business from another US citizen with years of tax returns. And it also has a maximum limit. So it generally doesn't work for businesses above 5 million. And you'd almost never see it on deals below, say, 500,000. So you only really have that range of 500,000 to 5 million. Below that, there's not really that many options for financing. There are definitely options that come along. We've seen kind of new services and products and companies that come along and think they can do it, but have never really stayed around. And then above that level, there are definitely more options. Ironically, if you want to buy $100 million business, there's many options out there of ways you can get hold of cash and companies that will want to lend to you or invest in you. But if you're doing a deal for $100,000, that's not very interesting in the world of lending. So there's not really that many options. And obviously you can always negotiate a deal with the seller. But the reality is if you're savvy seller and you've hired a company like FE International on your $100 million business, you're probably not going to accept a deal which is $5 million in cash and then 95 million paid in a structure that you heard on TikTok will work. It's not really how it works.
Fair enough. And then obviously you also need to, even though there's a lot of offers for financing of $100 million deals, you need to earn the right to do these kind of deals, right? So you need to somehow start small first.
For sure, you have to have some sort of, to get cash from either investors or lenders, you need to have some track record. Almost nobody is lending $100 million to somebody who's never done anything before. So yeah, you have to build some sort of track record. That could be smaller deals. That could be deals where you have a job or like you're employed. You don't necessarily have to be an entrepreneur to be able to raise money. So yeah, lots of different options. But to your point, you have to actually do it first.
I want to dig deeper into website flipping now a little bit. So let's go extremely deep on how do you actually buy a business? How do you spot good businesses? What are different types of businesses that you see? Valuation, I think, is also a very interesting topic. But first, very quick question. Does this even still work in 2024? Because the internet has been full of, and you started with this a very long time ago already, right? So is there even still opportunities out there, or is this market so saturated that, you know, basically the only people making money with this are people selling courses on how to do this?
I mean, people making courses definitely making money, but I don't personally believe in saturation. I just believe in doing it better than other people. Most people are lazy and will do a bad job of doing almost anything. So if you turn up and do a good job and you do the things you say you're going to do, you're automatically ahead of almost everybody. Actually, before we jumped on this podcast, I was speaking to a client who recently sold their business in the 9-figure range, so over $100 million, and they had acquired that business about 5 years ago for in the 6-figure range, 6-figure valuation range, that is. So there's definitely, and that's just one successful example, but there's definitely examples where people are buying small businesses, working on them for 1, 2, 5, 10 years, and then reselling them for more. There's not really like an upper limit or a lower limit where it doesn't work. You see multi-billion-dollar deals get done all the time. For example, when Facebook bought Instagram for $1 billion, I think most people probably commented at the time that it was stupid and they were overpaying for that business. But now Instagram as an independent business would be worth significantly more. So if Mark Zuckerberg can do it with $1 billion, I think anyone can do it at any level if you apply the same things. Obviously, you don't necessarily have the resources that Facebook or Mark had, but you can just do it on a smaller scale. So yes, it definitely still exists. People are definitely still doing it, but it's definitely the market's definitely got more sophisticated. Said when I started out, companies like FE International didn't exist. So if you had a business to sell for $50 million or $100 million, it wasn't really a company you could call. You could try call a really big investment bank like JP Morgan. They weren't interested in a $50 million deal. They're still not interested in a $50 million deal. Hence why we exist and do a great job at that level. So that's where things have changed a bit today. It's probably easier in some ways because there's more exit options, like all the way from really small deals to much larger deals. Whereas 15 years ago, yes, there was less competition, but there was also less resources. Like, yes, there was some courses out there, but you couldn't really find any podcast. Channels like yours didn't exist. You couldn't get good information out there. You had to figure it all out yourself. You had to lose money. People would get scammed all the time. There were all sorts of different challenges. So yes, that doesn't necessarily mean it's easy today. Things are different, but people are just buying or flipping, whatever you want to call it, buying and selling businesses later on all the time.
So let's imagine I'm 18-year-old Kevin. My net worth is absolutely laughable. So I have a couple of K to invest. how do I start? So I guess I somehow need to, find my first couple of deals. Maybe I need to think about what deal do I even, like what kind of business do I even want to buy? How do I get started?
Yeah, so the hard part is finding a business to buy. So there's not a perfect way to do it. You can go to a marketplace. There are marketplaces, I guess, like eBay, but not necessarily eBay, where you can go. The problem on marketplaces is you're then competing against everyone on the marketplace. When I started out, I would do deals in like private industry forums because no one was buying and selling that. So I started there. There was no competition. That still exists in almost every industry. So you could probably pick any industry you know about, find a private forum or community, join that community, become active, and with 100% certainty, there'll be business owners in that group. And the thing with business owners is a lot of them have multiple projects. So sometimes the best opportunities are the ones started by someone super successful, but they had this kind of idea that they half started, made a little bit of money, then they gave up on it. So if you have really limited resources, that can be the best place to start. Or you might even find people who are like looking to sell something and maybe they've just started one thing, it's done okay. Maybe they now have a job or something like that. So I think you want to try find a place where you have not necessarily the only person with access to deal flow, but the best place to find deals, ironically, is not where people are selling businesses. You want to go and find places where people are in a specific industry, but they're not necessarily all talking about buying and selling. Otherwise, you're just competing against everyone who's buying and selling. Just like, again, going back to the eBay example, anyone in the industry would probably know that the best deals are not to be bought on eBay because there's millions and millions of buyers browsing every day. There's automated tools. There's all sorts of different things to kind of help people find deals in a relatively unfair way. So find communities. And let's say you wanted to buy like a YouTube channel, for example, and you would know about the space. You can find a YouTuber who maybe produced a bunch of videos, did quite well. Maybe they got monetized. They had some kind of subscribers, and then maybe they stopped publishing. That could be a good opportunity. If you email them and say, hey, I want to buy your channel, they probably don't get many emails saying, hey, I want to buy your channel. So if you do a good job and you're like very personalized for the way you send the message, lots of people will reply to you. If you just send a mass message to 10,000 people, that's not going to work. I know as a business owner, I get about 1,000 emails per day. If you send me a mass email, I get lots of mass emails, so I will not reply to it. If you specifically email me and say, hey, Thomas, I saw XYZ, and X, Y, and Z is clearly something I specifically did, I'm much more likely to reply to that. And regardless of how busy someone is, people will always reply to you if you're personalized and persistent.
One thing I can add from my side is in terms of finding good businesses, obviously there's all these platforms that we all know like Flippa or whatever, but as you already said, I think you can find some good deals on there for sure. But if you want to find the real gems, you need to dig a bit deeper. And I've been consulting someone who has been doing an HVAC business roll-up strategy for years now. So basically they are making tens of millions of EBITDA with an HVAC business. So basically, AC repairs and stuff like that. And this guy, how he actually got started, and I think that's very interesting, is he joined a Facebook group where there was HVAC owners talking to each other about their problems. And he then, I think the guy bought the Facebook group from whoever owned it for a couple of $100 and then started out reaching out to these HVAC owners, the ones who were most frustrated, and told them, look, I can buy your business. And obviously he already knew about the problems of these HVAC businesses, and he knew with his system, with his processes, he can kind of take them to the next level. So that worked brilliantly well for the guy. And also for us, buying YouTube channels is also part of our strategy. So we I often look at, a couple of Discord groups, for example, where I know there's interesting YouTubers in there. Twitter is also interesting to just see who is kind of active in the space. And then, just initially writing people, even if they don't really want to sell in the first place, but just being in contact, saying, hey, like, I'm interested. If you ever want to, consider selling, I'm here. And then you're probably, if you stay in touch with these kind of people, you're probably the first person that they will call if, they actually want to sell.
Definitely. I think the example you just gave there is kind of what I was trying to describe, like communities for HVAC businesses, and almost any business you can think of, there are communities, whether it's a Facebook group, whether it's kind of, I don't know, a LinkedIn group. There's so many different places these communities might be. You just need to find them and kind of be helpful. And to your point, you can learn everything you need to know about almost any industry by listening to owners complain to each other about their problems.
Yeah. So the next question someone might ask themselves when they're looking to buy a small business is, what business category should I even buy, right? There's different types of businesses. On your website, even for these bigger businesses and deals, you are listing 4 types of businesses: SaaS, e-commerce, content, technology. Obviously, on this small level, there's a couple of more. You could buy an app. So if you would draw up the landscape for us, what are roughly the different types of businesses that someone could buy in this small price range, below 100K? And maybe after that, we can also talk about what you think, like, are there, categories that you like more or that you like less, or how should someone decide between these categories?
Yeah, so the categories don't really change as businesses get bigger. So you can apply it to $100 or $100 million. It's all going to be the same. At least in the tech space, you have SaaS companies, which is software as a service. So that's recurring revenue. You have e-commerce businesses, so selling products online. And then there's lots of derivatives of all of these business models. So for example, within SaaS, you mentioned apps. You'll have app businesses, which often have a recurring revenue stream. Sometimes if you're selling like on the Apple App Store, for example, it might just be like a one-time fee. So it's not technically SaaS. We would call it an app business. But some people might say they have a SaaS business, but it's actually an app business. And then e-commerce, like I said, e-commerce is generally selling a physical business. If you want to sell pens, an e-commerce store. Or you could sell digital products, which some people, again, would call e-commerce, but not necessarily. So digital products would be, I don't know, I'm selling an ebook about pens. That would make sense in that context. And then you get service businesses. So we work with a lot of agency owners. And services can cover all sorts of things. You can have marketing services, design services, programming services. You can have services for literally anything in any industry. So they're probably some of the main categories. And you get things like content. Like we call it digital media, but content could be a blog where people are writing blog posts. It could be a YouTube channel. It could be a podcast. It could be like an Instagram account. There's all sorts of different ways that people produce content. And that's what's changing all the time. Like 15 years ago when I started, people weren't, like TikTok, for example, wasn't a thing. Whereas now there's entire businesses built around that platform. So they're the main categories we focus on. And like I said, there's lots of subcategories within. So I think if you start there, in terms of what you should buy, like is there a good category and a bad category? I always think the answer to that question is no. It really depends what you're good at. If you do not know how to code, you're not a programmer, the first business you buy should probably not be a software company unless you either have a partner or a friend or something who will help you, because you're not going to know what you're doing. Same with e-commerce. Generally, e-commerce businesses are great for people who are good at marketing because it's more about kind of selling. Yes, you have to manage logistics, things like that. Content, you probably shouldn't buy a YouTube channel if you're not confident putting your camera on and putting like a headset on and doing audio. Yes, there are ways you can probably produce content without it, but it's probably not going to be that effective. So definitely should not follow trends and just say, well, everyone's building these kind of businesses, so I'm going to do the same. You really need to focus on things where your skill set can help with that business. And I think the example you used earlier, like the HVAC business, if you interviewed 1,000 people who are currently doing an MBA and you said to them, name an industry you are passionate about, probably 0 of them will say HVAC. They'll all say AI, technology, crypto, YouTube. They'll give all the buzzwords they've heard. So if you'll compete, there's 1,000 smart people who graduate their MBAs. They're all going into that space. How many people are graduating and going into the HVAC space? Almost nobody. So I would argue that the best thing to do is often not following the trends. That doesn't mean there's not going to be like buyer demand. Buyer demand, particularly at the high level, is really driven by like the earnings of a business. If something is making money, the best thing about M&A is there's always someone out there who will want to buy that business. If it's not making money, it doesn't matter what industry you're in, whether it's really like trendy or popular or whatever, there'll not be a buyer. Well, there'll very likely not be one. So I think the best thing to do is figure out what you're good at, where your skills lie, where you even have unique access to deal flow. So if you run an HVAC group, then yes, you should probably look in the HVAC group and buy an HVAC business. If you don't run an HVAC group, that will probably make less sense. And you could listen to me and say, well, I mean, we specialize in technology businesses. That doesn't necessarily mean you should buy a technology business. There's businesses you can buy and sell outside of technology. I'm not so biased to say, well, everybody should buy a tech business, or everyone who launches a business should be in tech. I don't necessarily agree with that. I personally don't know anything about the HVAC industry. I don't know anything about the restaurant industry. I don't know anything about lots of other industries. I just know about mine. I think anyone starting out should do the same thing. You need to become an expert at one thing. There's no point. That'd be like you suddenly saying, okay, maybe I'm just going to write blog posts and I'm not going to do YouTube anymore. Like conceptually, you would understand the two, but you're a popular YouTuber, whereas as a blogger and writing content is different. And it appeals to different audiences as well. So I think it's important to try and be the best or one of the best you can be in a particular industry, rather than just following what everyone else is doing because it's popular.
Yeah. And I think mentally you can also think about a matrix where there's businesses that are either technically very complicated or are not, right? And then if you are let's say many of our followers are, in their 20s and maybe they studied business or whatever, if you don't have the knowledge to code, to really take a product to the next level in terms of technical terms, maybe you don't want to buy all these businesses that need some technical know-how, because at this deal size below 100,000, it also doesn't make any sense to bring in a technical person, because this is going to eat up all your profit margin, right? So you want to, whatever you buy on these small deal sizes, you should make sure you can do basically everything. And this doesn't mean that you need to be an expert in it already, but it should mean that at least within the next couple of weeks or months, you can become an expert. So if you buy a content website, you don't if you have never done content in your life, probably you can learn that. It's not that complicated, but you should have the confidence that you can become really good at that and you're in some way passionate about it. Otherwise, why buy the business?
Definitely, it's a really important point. Like the smaller the business is, probably the more work you have to do yourself. So it's more important you understand it. If you're acquiring a company for $100 million and it's in the technology space, you don't necessarily have to understand the technology. Because the company probably has a team at that stage. It's probably important to understand technology, but not essential. If you're buying something much smaller and there's no employees, it's just you, then you need to better do it. And you can't just hire people to do everything when something's really small.
Yeah, 100%. So now let's say we decided for one of these categories, whatever, e-com, SaaS, apps, content, whatever it is, and we are now looking at a couple of deals. We found them through a couple of Facebook groups, or maybe we even went to Flippa. Now, how do we spot a good business? What are some metrics or some filters that we can apply to make sure this is a proper business?
Well, so yes, the first thing you need to do is look for something that you can actually improve. Just because it's a good business doesn't mean you can improve it. I generally think there's no point buying a business if you can't do at least some things better than the existing owner. So sometimes, ironically, you might actually be looking for a bad business. You might be looking for a business that's doing lots of things wrong, and you can come in and improve it. I think the important things, you need something that's making money. You don't want to buy someone's idea. Like maybe they've built a really fancy kind of platform, nice looking website, all this technology, all these ideas. But if it's not making any money and has no existing customers, you probably don't want to buy that business, regardless of what you think you can do with it. Even if you're good at marketing, you don't have any proof that it can make any money. So I think making money is important, at least revenue generating. Ideally, it will be profitable. But there's lots of examples of businesses you can buy which are generating revenue. They're not profitable because they've been badly run, and you can improve it. So I think where a lot of buyers go wrong is they turn up and they come with a list of criteria and they say, here's all of these things I need. I have 25 bullet points that every business must meet in order for me to buy it. And if you turn up those 25 bullet points, you're never going to buy anything because no business will ever hit all 25 of your criteria. So I think you just need to figure out a few criteria that are essential to you. So let's say, for example...
It's the same when you come up to like looking for the right woman with a too long list. You need to have some kind of flexibility there.
It's the same with ultimately anything. You have to be practical and realistic. So if you turn up with a really long list, you're never going to buy anything. And the person that will win is the one who is a bit more flexible and said, well, I don't really care about these things, or if I get a deal done, I can start working on it. No deal is ever perfect. Of all the deals, as a company, we've worked on over 1,500 transactions. Of all the deals I've been involved in, none of them are ever 100% perfect, where the buyers turned up and they said, this is what we want. And we say, wow, this is amazing. We literally have this business that has all of those things. And that doesn't happen regardless of how much money you have. If we're selling a business for $100 million, or if you're trying to buy a business for, say, 100,000, it's never going to work like that. Yes, there might be some examples you can find of people who got really lucky and did find that. But I think you need to be strict about a few things you care about. So, for example, if you say, I want to buy a YouTube channel, and you're going out there to buy a YouTube channel because you think you can create great video content and create a popular channel, that should probably be a non-negotiable point. So you probably don't want to then go buy like an Instagram account instead. You should just stick to that one criteria. But it might be the channel you buy has the obvious thing you would have. If you and I were sat there studying for our MBA, we would say, what do I want in my YouTube channel? Like more than 10,000 subscribers, already monetized, high quality content, high quality audio, lots of comments on every video. But the reality is those channels probably aren't for sale, particularly when you're starting out as a buyer. So I guess I would look at it like, do you care about the video quality? Like, why not just buy it and then produce better quality videos? Do you care about the number of subscribers? Maybe they have fantastic content. The content's really high quality, but the current owner has no idea how to market it. So they have very few subscribers. That really applies to anything you're looking at. I'm just using YouTube channel because that's what we've kind of talked a bit about today, but that applies to anything. So your criteria should probably be YouTube and then a few other things. But if you turn up with a list of wants, you're never going to get anything, particularly when you're starting out. As you get more established, it's a bit different because deals will start to come to you. What I have to do today to bring in new clients to FE International is a little bit different from what we did when we started out in kind of 2010, because no one knew who we were. Now we have a good reputation and people call us and say, help me sell my business. That's not what happens on day one.
Now, let's say we decide for a business. Sometimes we're lucky and the website just gives us a price, but sometimes we need to come up with some kind of valuation, and there's many ways to value a business. How do we go about that? Do we take revenue multiples, EBITDA multiples, some other multiples? Do we take some kind of comparables? How do you go about that with this kind of small deal size?
So valuation is a combination of art and science. A lot of our team internally, we have a big valuation team. We have a daily valuation meeting. We spend a lot of time talking about valuation. And even with smart people in the room, people might slightly disagree on how to calculate it. But I guess there's two slightly different things in play. One is, how do you value it? So mathematically, what is a business worth? You can do that. We'll use a lot of different kind of ways to do that. So one might be a DCF, or discounted cash flow analysis, which is a very common finance way of valuing a business with some established history. We'll also look at what we'd call comps, or precedent transactions. So similar businesses that have sold. So you come to me, you have a business making $20 million a year and you want to sell it. We will we'll research other businesses that were similar and have sold, find out what they sold for, and then you can apply a lot of that to your business that makes 20 million a year, or 50 million a year, or 5 million a year, 5,000 a year. It doesn't really matter. So valuation is one thing, and we could do another interview. We could sit down for a week talking about valuation, and we might disagree. There's so many different ways you can look at it. So valuation is one thing, like technically correct is one thing, but then what the seller will accept is a completely different number. So technically the business you look at might be worth $10 million, and you might say to FE, can you value this? And we'll say, yeah, $10 million, but that doesn't mean the seller's going to sell for 10 million. They might want $50 million, in which case the deal is completely pointless, because you're not going to persuade someone who wants $50 million for their business to sell it for you for 10, even if your nice model that you've built and you're like convinced is true says that. So there's two things. Yep. What is it worth? What does someone want to sell for? The hard thing, and like part of the art, is connecting the two. So a business that meets all your criteria that we were just talking about, and a business that you can actually buy for a price which is reasonable. So and often part of the reason having really long criteria is not a very good idea is you can end up with so few options, you might be forced to overpay. If you have your 25-point criteria, when you do find that business, because it probably exists somewhere, maybe the seller wants twice as much of the business as the market is willing to pay. But if you just go with like one or two things that really matter to you, then that's where you can find better deals. But it's not necessarily all about what you pay on the way in. Yes, it's important to get a good deal, but I've seen deals in the past where people would say the buyer overpaid because it seems like what they paid versus the valuation was much higher than they should have done, but maybe they had a really good plan. Maybe they already knew how to improve the business. Sometimes it's as simple as just you can acquire a business, you can just raise prices and the business will make more money. Sometimes you can just add a new distribution channel. Sometimes you can just change something and it will make more immediately. So it doesn't really matter what you pay on the way in because you can improve it. So I think you should focus more on not your criteria on the way in, not what the valuation is, but where can you get it to, and then start there. And then you can figure out what you might be willing to pay. And it might be much higher than the business is actually worth, but it doesn't really matter because you can, it doesn't, more than it's worth in terms of what a professional who works like FE International will tell you the business is worth. It doesn't really matter. If we tell you a business is worth $50 million, the seller wants, let's say, $70 million, but you know you can quadruple the business and it's then worth 200 million. Does it matter that you've paid 70 million, which is 20 million above what you should pay? Like, definitely not. Absolutely does not matter. And that you can apply that at any deal level. I'm just using a somewhat arbitrary level that we would work on, but you can apply that at all levels. So that's my mentality when it comes to valuation. Like, yes, we think about it a lot, but doesn't really matter what we think a lot of the time. It really depends what the seller wants. And if you're doing deals and expecting that sellers will just agree to a rational valuation every time, then you're probably going to struggle, because it's harder than that to persuade people.
I know that some people still going to ask in the comments what are some rough multiples. So do you, like, for these kind of smaller deals below 100,000, is there like a very rough multiple range that you can give? And then are these revenue or EBITDA, or what kind of multiples would those be?
For the majority of small deals, you'll look at either a profit or close to profit multiple. Generally, you don't really get revenue multiples until businesses get quite a lot bigger than the 100,000 level. And really, the range can be anything from zero. Lots of businesses are just worth nothing. So 0 is the low end of the range, and then probably up to, say, 10 times earnings for small businesses. But at that level below 100,000, my belief, and we don't do deals at that level at all, but my belief is that valuation is somewhat arbitrary. The business is so small, sometimes it's literally just what the seller wants. The seller might say, I want $50,000. And that's just enough. They're like, well, it might be irrational, but they say, well, I spent a bunch of time on it. I built a nice website. I built a YouTube channel. I made some videos. I had to pay to get them produced. That's what I want to sell for. Is technically that correct way to value a business? No. But the way small deals get done is often just like that. Like your HVAC example, right? That's not something anyone teaching you how to buy businesses would probably not teach that approach, but it works, and that's the reality of how deals actually get done. Even though most people wouldn't know that's a thing. A lot of it's just like the connection you build.
Cool. And let's move on in the let's say in the whole process. Now we're at the point that we have a rough idea of what this thing might be worth and where we might want to take it. Are there some negotiation tactics for these kind of small deals? I imagine it's, in some sense, it's very different from the 100 million plus kind of deals that you are doing, where there's more stakeholders involved, right? And more people sitting on the table. In these kind of scenarios that we're talking about, we're just talking to the guy directly, or the girl probably. But are there nevertheless some negotiation tactics?
Yeah, it's a good question. I mean, yes. Firstly, a lot of it depends on who you're negotiating with. And everybody has a different style. So you can't just... The people who are best in the world at negotiating can change their style based on who they're dealing with. They don't just do the same approach with 100% of people, because it doesn't work. So firstly, you have to try to figure out who you're dealing with. And I guess there's lots of different considerations.
And is that just, sorry for interrupting, but like these different negotiation styles, that dependent on the personality type of the person, or are there some frameworks for that from your
I think
experience?
a bit. Like, I personally don't use frameworks. I probably could, but I don't. I think I would look at it, and firstly, the first thing to do is find out as much as you can about the seller. And again, this applies to all deal levels. One of the best things about social media today is it's relatively easy. Most business owners have an online footprint, so you can find them on Instagram, Twitter, LinkedIn, Facebook. They're probably active somewhere. So usually you can do a little bit of research and find out a bit about them. Usually if you see someone writing content or producing video content, you'll have a reasonably good idea of their personality, so you can figure that out. And then, so for example, a really simple thing might, if someone is a YouTuber, it's reasonable to assume that they would probably want to do a video call with you because they're used to being on video. Reasonable to assume. So if you start emailing them and say, hey, let's negotiate this via email, they're probably going to be less likely to do a deal with you, because they want to be like this. They want to be like, hey, I can see Thomas, I can see Kevin. Like, this is what I want. Or you might find the complete opposite. Someone who is a blogger and just writes written content, and they don't even have their face on their website. Maybe they use a pseudonym or like a nickname or like a AI picture or something. Those people probably don't want to get on the call. They probably don't want to do a video call. So I guess the most simple thing to do in a negotiation is understand what the other person is like and figure out what you can. Or you can just ask people. Sometimes you can say, do you prefer an in-person meeting, if that makes sense? Email, phone, video call, WhatsApp. There's lots of different ways you can speak to people. Sometimes you can just ask people. I think that's a good way to start. People are much more likely to do a deal with someone they actually like. So yeah, you can read hundreds of books on negotiation you can read, but ultimately, whatever people say, people do business for people they like. So I think that's the first thing. If you can find out how to communicate with them based on what you can research or what you ask them, that's a good way to start. So I think if you're buying, like, you have to be quite confident as well. So maybe you're like someone who prefers email, but if you're dealing with someone who wants to do a video call, you have to, like, I'm a natural introvert. If you ask me in the morning, what do I want to do today? Going on a video call is not very high on the list of things I would personally like to do, but you have to learn how to do these things if you want to be good at negotiating and get deals done. So if you do want to do deals, you do want to kind of follow my footsteps or whatever, you have to learn how to actually talk to people as negotiating. Like, there's not actually really tricks and frameworks a lot of the time other than building good relationship. In terms of how you then negotiate, I think a lot of it is figuring out what's important to you, what's important to the seller, assuming they will tell you. And sometimes people will tell you most of it, and you can tell them some of it. And then it's really, there's lots of theory that will say you shouldn't do this, but I think the best way to negotiate is then find a way to meet in the middle. So let's say, Kevin, I'm buying your business, and I come to you and I say, here's 3 things I care about. Here's 3 things you care about. If there's no overlap in those 3 things at all, so 3 things I want, you can give me, and the 3 things you want, I can give you, it's easy to come up with a deal. But maybe 2 of them are complete separate, but 1 overlaps. And maybe one of them is like, you say, well, Thomas, I will sell you my business, but I don't want to be involved. I want to leave on day 1. And maybe my criteria is, Kevin, I need you to stay for 12 months to help me run the business. So that's the point you should focus on. So we then might agree, why don't we do 3 months? So you help me for 3 months, then you can leave and go from there. So that would be my suggestion from that perspective. And then the things that you don't really care so much about, don't try and negotiate just for the sake of it. Some people, particularly when they're young or less experienced in negotiating, will try and negotiate absolutely everything because they think it's some sort of like point scoring exercise. As I've got older and more mature at negotiating, I realize that's not really necessary. If you don't really care about something, don't negotiate it just for the sake of it or just to seem like you're clever. Just take the win and move on. The quicker you can get to an agreement, the better. And if you're like buying businesses or you want to sell businesses or run a business, one thing you need to learn quite quickly is time is money. So if you mess around for a month going back and forth over one stupid term that doesn't really matter to you, but you're just trying to get it because you can then tell your friends you've got to win, that's pointless. Just get the deal done, move on. You can then own the business and you can start doing whatever you want there. So that'd be my suggestion from that way. So focus on the best way to communicate. And that usually starts with medium. If you said to me, hey, Thomas, you want to come on my YouTube channel, come on my podcast? And I said, yeah, Kevin, I'd love to. Email me some questions. I'm not doing video. Then obviously that would never happen. It wouldn't make any sense. It's exactly the same with communicating with people. If they want to do a phone call and you're like, no, I'm going to send you an email, that's obviously stupid. It's not going to work. They're probably not going to want to do a deal with you, even if you know everything about their business and you can do a great job growing it. So a lot of this stuff just sounds like common sense, but be surprised how many people don't really think about the basics. And they're like, well, I read this book on negotiation that said we should like never meet in the middle. We should always try to get all of our points. But I think of it a bit more simply than that. Try build a good relationship. If there's something you don't really care about, don't negotiate it. There's no point.
All right. So to all the young gym goers and martial arts fanatics listening to this, don't use intimidation tactics. Uncle Thomas basically says, as amicably as possible, right? You're looking for the synergies, and that's where the magic happens with these kind of negotiation tactics and deals. So let's say we found this thing. Let's just say this business is like a $30,000 business. We negotiated nicely. We're kind of agree about all the deal terms. We now are going to be able to buy it for 20,000 for whatever reason. We buy it. What types of value levers are there? I mean, for these massive, let's say like these mega funds, right? They do deals where it's all about financial engineering almost, right? So that's where they already secure the value of this deal. But I guess for these small deals that we're talking about right now, below 100,000, that's where like you got to roll up your sleeves and you got to do some work to increase the value. Are there in your past, when you were doing website flipping, micro private equity basically, what were like your favorite types of value levers that you could pull?
So I guess the ultimate value lever in any business is really growth. The more a business is growing, the more it's worth, generally speaking. And then obviously the more it grows, the more resources you have. You can hire more people, you can outsource things, you can buy things. Bigger businesses are easier because you have more resources. So growth is the most important. But often, I think what people confuse when it comes to growth is growth can come from really simple things. You could come up with 100 different ways to improve a business, and one of them might take you 1,000 hours to do, and it might not necessarily be that effective. Sometimes the simplest thing to do, and I think I mentioned this earlier, but like increasing prices can be an easy way to improve. Is it one of the easiest levers in any business, regardless of the size, is pricing. And so, sometimes this could be counterintuitive. Sometimes reducing the price could be a good thing. Maybe the product's way too expensive, or whatever you're selling is way too expensive. And if it's lower, maybe your margins are slightly lower, but maybe you're selling. So maybe your margin reduces by 50%. So most people say, no, Thomas, you're stupid. You should not do that. But what if you then sell 10 times more? Maybe that's a good idea. Or it can work the opposite in the same direction. Maybe you could increase the price by 10 times, but you sell 50% less. Like you're still making 5 times more money, everything else being equal. So in most businesses, the best lever is pricing, and or a derivative of pricing. So for example, if say, Thomas, well, I'm not selling a product, I have a blog, and my blog has ads on it, then the way around that might be better ad placement, so more people click on it. It's not quite the same as a pricing improvement, but you're essentially making more without really doing anything. Sometimes it can be just, again, back to your negotiation question, how do you negotiate to buy a business? You can apply that when you're running a business. Almost every contract the business has, you can go negotiate. So if you have suppliers, or you have basically any product or service or software product you're using, you can go negotiate the price. You can save yourself money. You can negotiate with your existing customers to, maybe you don't necessarily increase the price, but maybe increase the duration. So maybe, Kevin, you and I'm selling you coaching, and you pay me $1,000 a month to coach you how to build your business. And maybe previously the plan was like $1,000 a month for 3 months. But it could just be as simple as saying, hey, Kevin, will you commit to, you've been working with me for a while now, will you commit to 12 months? So I haven't increased the price, I've increased the duration. But instead of me making $3,000, I make $12,000. So I often think of it in simple ways like that. Some people get overcomplicated, and it can be the way to go, but some people will say, well, we have to launch a new product or a new service or make the product better. Sometimes people, like the other key thing that a lot of people can do is just improve marketing. All else being equal, if you drive twice as much traffic to a business, it's probably going to make twice as much money, assuming those channels are similar to whatever the previous owner was doing. So that's the next thing you should focus on. Sometimes there could be, the other thing is you often need to do lots of different things. you might identify 10 things you think are wrong in the business. 9 of them might do nothing. 1 of them might make all of the difference. So you don't necessarily have to make an improvement with everything. In some businesses, just one big improvement and change will drive all of the value growth. Kind of to your question, it doesn't necessarily have to be every single one. And I also think, again, particularly as I got older and more successful, you never really know. You have to take your ego out of it. It doesn't even necessarily need to be your idea. Someone else could have given you the idea. It doesn't really matter. But yeah, try lots of things, test lots of things. I personally like price, but it could be a derivative of price, like duration, something like that. That's a good way to improve any business. And generally, if people are happy and like your business and like your product or service, whatever it is, they're either willing to pay more, or they're willing to buy it more frequently, or they're willing to subscribe to it, or that there's some way to extract more money from that person. Because sometimes customers just want an easy way to buy. I was actually speaking, again, before we jumped to our call today, I was speaking to someone who supplies a product at FE International, and currently the most of this product I can buy from her is 12. And she said, "Oh, Thomas, what's your feedback?" And I said, "Well, I want to buy 48, but there's no easy way to buy 48 on your website other than doing 4 times 12. So it sounds really stupid, but in that case, she literally would have made 4 times more from us by having the option to buy more. Sometimes it's really simple like that. And it sounds really stupid, and most people will say, "Thomas, it's not that easy," but sometimes it can be.
I completely agree with the fact, or with your proposition, that it's often about these simple things. And one anecdote I can tell from this YouTube acquisition space is one of the first things you typically do when you buy a YouTube channel is just increase the upload frequency. And that sounds so, easy. It's not as easy as it sounds, because obviously in the back end you then need to have, the production capacity to actually pump out more videos. But it's also not like, okay, let's do completely different content, or let's build like a shop on top of our channel. No, it's literally do what you're already doing, just do it a little bit more often. Instead of 2 videos per month, maybe do 3. And that's how even the big funds who are like in the private equity space and doing acquisitions of YouTube channels or channel bundles, that's how they realize, the first value, just increasing upload frequency. So yeah, sometimes focusing on the simple stuff makes sense.
Yeah, that's a good one. Like upload frequency, that can apply to almost any business. So if you buy a blog and they publish once a week, the simplest way to improve it without knowing anything about that business is probably publish twice a week or once a day. And you can apply the same with social media. Obviously you can't post 1,000 tweets a day, but if you're active on Twitter, posting 10 times a day is probably better than 1 time. And that applies to lots of things.
Now, finishing up our journey, when you buy this business, question, do you already buy it? I mean, you did that in the past. Did you buy these businesses already with a time to sell in mind? So you were like, I think you told this anecdote where you needed to like flip it at the end of the month again to make your credit card payments. Is that what you suggest people do? Like buy it and already know, okay, like in a couple of months I want to sell it? Or do you do it otherwise?
Yeah, I think it's important to know the timeline, because I knew my timeline. So that meant if I had an idea and it would improve the business in 12 months' time, that was pointless because I had to sell it within a month. But if you look at like private equity, a lot of private equity funds usually have a 10-year duration. So they don't necessarily care about things that improve the business on day one. They want things that will like gradually improve the business over time. So knowing your duration is important. There's not a right or wrong answer to that. I had a credit card bill to pay at the time. Lots of buyers we work with today might have, if they're buying a business, again, 100 million example, using debt, maybe the duration of that debt is 5 years. So in 5 years, they have to either pay it all back or they have to find a way to sell and then use some of the proceeds to pay the debt back or the investors back or whatever it might be. So knowing it going in is very important because it will help like define the decisions you make. Like, should it be a short-term decision or a longer-term decision? You don't really know until you kind of get into it. Yeah, so very important to know the duration because then you can establish what you should be doing. Like I said, if I had pay my credit card in a month, there's no point doing something that improves the business in 12 months. And equally, if I'm holding it for 10 years, maybe I don't need to rush on day one and make a quick fix to a longer term problem. Maybe I can spend 3 years to fix that problem, which means that over time it will grow more, but maybe the short term growth is less. So it's definitely no right or wrong answer, but it's definitely important to know at least a range of what your duration is going in. Even if it's just as simple as like less than 1 year, 1 to 3 years, more than 3 years. That's probably a pretty good way of establishing what you can and can't do in that time.
That's cool. And now, if I want to sell it, how do I actually do that? I mean, if I have a 100 or $200 million business, then I contact FE International. But if I, have like a $20,000 business, just put it on Flippa, or what do you suggest?
Well, I think a lot of it might depend, like, where did you buy it from? Probably, if you go look where you bought it from, chances are there's a similar way to sell it in there, maybe to a bigger business in the space. The reality is at the low end of the market, it can be quite difficult because there are some marketplaces, but marketplaces have challenges. But for almost any industry you buy in, it doesn't even have to be like a online tech business, there's going to be a marketplace or some sort of way you can sell a business or connect with business owners or investors in that industry. So I don't want to name specific platforms because it really depends on the business, but that's usually a good place to start. I think one of the advantages of marketplaces is generally, by their very nature, you're going to get around market value for your business because there's lots of people, professional buyers in that industry on that platform. Hopefully, if you do a really good job buying a business, you might get approached. A lot of the clients we work with have built a successful business and they get approached by a buyer emails them, and then they come to us and we represent them throughout the process. We help negotiate with that buyer and bring other buyers into the process as well. So obviously on day one when you buy a business, that's not going to be the case. But if you do a good job marketing, growing the business, being successful, gaining market share, over time people are going to start to approach you. So that can be a good option as well. That's probably not going to happen if you have a $20,000 business. It's more likely if it's 20 million. But there's definitely some opportunities that can exist. Just doing a better job will open doors in lots of different ways. But yeah, starting out, I think if it's $20,000, probably a marketplace or wherever you bought it from, that's usually the best way to go.
Now, Thomas, you started an M&A firm with billions of transaction value. M&A, as we all know, is one of the finest arts in the realm of finance. And we have a lot of followers and listeners who actually, I get questions like this in my inbox of, "Hey, Kevin, how do I start an investment bank?" And I always reply that I have no freaking clue how to do that, how I would get started. But we have you here, and maybe you can help us a little bit. So first question before we dig into how all of this got started is, how do you actually make money with M&A?
So generally speaking, in M&A, there's usually two fees. One is a retainer. So often an M&A firm will say, we have to do a bunch of work for 6 months, 12 months. You need to pay us a monthly retainer just to prove you're serious, essentially. Yes, there's work that has to be done for that. And then commission. So a percentage, it might be a tiered. So it might increase or decrease with size on success. And success meaning a closed deal. So you sell your business for $100 million, you will pay us a percentage of that when the deal closes, and you probably paid us a monthly fee along the way in the form of a retainer. At the much lower end of the market, let's say your $20,000 example, retainers don't really exist. You probably just pay a small transaction fee. But yeah, we get paid primarily commission. So if we're not good at selling and I'm not a good negotiator, we're not really getting paid anything.
What are examples of these commissions? What percentages are we talking about?
It will really vary depending on the size of the business. So let's say you have a $200 million business, maybe you're paying 3%. If you have a $10 million business, maybe you're paying 10%. There's not really like a standardized fee in the industry. A lot of it will depend on the firm you're working with. Better firms will generally have higher fees because they're better. And like worse firms will have lower fees because the only way they can compete is on fees, not on the quality of their service. So yeah, I'd say generally 3 to 10% on deals in the 10 million to 300 million range. Yeah, there are some variances, but that's probably a good place to start.
And this retainer feeds off of the commission, or is that something that is just on top of the commission? That you
No,
guys
it's usually deducted. So it's kind of like almost like similar to a deposit, I guess, to kind of show you're serious and like cover some of the overhead related to working on a deal. But yeah, in most cases it's refundable.
And then lead us through the M&A process from a high level. I mean, you have valuation, audit, prospectus. So what are the different stages of deals?
Yeah, exactly. So step one is valuation. We don't work with anyone unless we valued the business first. So if we say your business is worth 100 million, but you want 300 million, then we're not going to work with you. And equally, if you think your business is worth 100 million and we think it's worth 300 million, you probably are going to work with us. So valuation is important. It's almost like a proposal for us. It's like, here's what we think your business is worth. Here's what the fees look like. Here's what the process looks like. If you then hire us, we sign an engagement agreement. We then go through an audit process, which is primarily financial audit. So if you tell me your business is making $10 million a year, we need to prove you're making $10 million a year. So we go through financial audit with accountants. And then some other things, we'll look at like the legal side of the business. Is what you're at the most simple level, is it legal? Do you own it? Are there any like potential legal issues that might come up in the deal? Are there any regulatory concerns? Is the location a problem? Then we look at operational. So can a buyer buy this business and operate it? Or does Kevin have some special connections where only he can run the business? So there are considerations like that. Technical, if it's a tech business, like who was the person who programmed it? Do you own the code? Is that programmer still available? Lots of different questions like that. And then we put together, some people will call it a prospectus, some people call it a SIM, so a confidential information memorandum. There's lots of different ways you'll hear it described, but that's essentially a nice long document, usually in PowerPoint or a PDF, which will kind of outline information about the business. Usually that is, depending on the size of the business, it's probably a 30 to 80 page document. So that's prepared generally by the M&A firm. So we put that together. Then we work with the seller to make sure they're kind of happy with what we're saying. Like, do they agree with everything we're saying about the business? Are we accurately representing it? That process generally takes a couple of weeks of back and forth collaboration. We'll ask questions. We kind of design it. And then once that's done, simultaneously, as the audit's been done and the SIM's been put together, the team are preparing buyer lists, so buyers we're going to reach out to. It might be buyers we already know. Maybe we've sold a business to them before. Might be buyers we think are a good fit. And then a lot of that is like research around, like, does someone internally already know that buyer? Can we find the email? Do we email them? Do we send them a message on LinkedIn? Do we send them a message on Twitter? Or like, how do we find them? Do we phone them? So a lot of research is done into like who the buyers are. And then what we call going to market is when we start reaching out to those buyers. And then generally in most transactions, there'll then be a timeline given to buyers, or like a process setter, which basically says, so let's say we're starting today. So we're starting a deal in February. We might say, okay, the deadline for offers is the 28th of March. it's just a random date I've come up with. Let's say 28th of March. So by then, like an offer has to be agreed. Sometimes there'll be a couple of stages. So there might be one stage for what you might call a IOI, or an indication of interest. So that's usually based on what you've told me. I think I'm willing to pay $100 million for this business. But you might provide a range. You might say 80 million to 120. And sometimes there's a process where we go to LOI, for a letter of intent, which is a slightly more detailed version. And you might say, okay, I've actually now reviewed a bit more information. It's not a range anymore. It's now 105 million. So you say, okay, I'm going to pay 105 million. And then hopefully on the majority of deals we work on, there's multiple buyers. So usually there'll be 5 to 10 offers from different buyers, and we'll review that with the seller, and we'll say, okay, this buyer's offering you 105 million, but they're only paying you 60 million upfront in cash. This buyer's offering you 90 million, but you're getting 90 million in cash. So while that offer's lower, maybe it's actually a better offer because you like them and you're getting more cash. And there's lots of like more subjective factors that go into it. And then generally there's a due diligence period. For most businesses at that level, that's about 60 days. So we've told you the business is making $10 million or whatever it might be. You then verify that it's making that. Again, all of the due diligence we've done before we list the business, the buyer will then do as well. So part of the reason we charge for retainer and part of the reason that process takes a bit of time is we are making sure that the business is, at least based on what we can figure out, the business is legitimate before we put our reputation on the line and go represent it with buyers. And hopefully that means there's then no issues when we get to due diligence. So no one's looking at a business we represent where we say it's making 10 million and then you get into the process and you realize it's actually making 5. That's where a lot of the lower quality M&A firms and where things like marketplaces become a real problem, and why marketplaces don't really work for deals above a certain level. Is that sellers will, not always on purpose, some sellers will just get their numbers wrong, or they won't remember their numbers, or they'll say something but it's actually a little bit different. Hence why it's so important to have that audit process. And then again, simultaneously with the due diligence process, there's a legal negotiation. Generally attorneys will be involved, or lawyers depending on what country you're based in. Contract would be agreed upon, which outlines all of the terms of the deals. Most of that should have been determined a bit earlier in the process, like price and things like that. But it might be, if I'm buying your business, Kevin, it might be you want to stay for no months, I want you for 12, in the example I used earlier, but contractually you agreed to 3. So that's in the agreement, and it will very clearly outline what you have to do. So Kevin, if I call you, you have to reply to me within 24 hours, things like that. And then hopefully the deal closes, funds are transferred. The seller then obviously has the obligation to transfer the ownership to the buyer. The deal is then done. And then usually in deals of that level, there's future obligations on behalf of both sides. So maybe the buyer has to send monthly earning reports to the seller because they're paying the seller a percentage of revenue for a certain period of time. And then the deal is done. And then we get paid when you get paid. So we don't get paid at any other stage. Just when the seller gets paid, funds are released, we get paid, and then the deal is done.
How do you start a massive finance firm like yours? M&A firms, boutique investment banks, those are business models where usually you would say, okay, probably the usual path to doing something like that is working for decades at, a bank like JP Morgan or whatever, and then at some point you're a managing director and then you branch out on your own and, start your own bank or your own M&A firm. But there seem to be other paths to get there as you showed. So what are, let's say if you would start again, or if you had like a 15-year, 20-year-old younger version of you, what would you tell them? What are some paths to get there?
So I think having the background is definitely useful. Everybody we hire today has a background in investment banking or some similar industry. So I'm not hiring people who have no experience and like teaching them how to do M&A. We hire people who know when you start, honestly, if you're going to start and you don't have a corporate background, you've not done it as a job, you just need to figure out how to do deals yourself. And if you can't figure it out, you're not going to build a successful firm. So you need to learn how to do deals. And then essentially the way I did it is, as we did more deals, started hiring people. So hiring best people we could afford with our kind of profits or with our revenue, I guess. Hire people. And then as you get bigger, as you get better, as you build a bigger and better reputation, you start attracting better talent. People who work at really big investment banks probably don't come and work with you when you've just done 2 deals, but they might come and work with you once you've done 2,000 deals or 200 deals. So building a good reputation is important. I would say in the advisory space specifically, it's important to specialize. I would not hire FE International to sell a restaurant, but I would definitely hire FE International to sell a software or a SaaS business. So we're good at like selling technology businesses. We're not good at anything else. So if you're going to start an advisory business, you need to figure out what you're going to advise on, and it probably can't be too broad. Obviously, the big investment banks, like you mentioned, JP Morgan, yes, they'll do M&A for lots of different industries, but they have tens of thousands of employees, so they can hire experts at everything. But when you're starting out, you can probably just do one thing. So you're providing one service to one type of person or one type of business owner, and that's all you do. And then over time, you can get a bit more broad. So as we've grown as a firm, we now offer, I guess, a wider range of services, wider range of industries, and that's going to keep growing from that perspective as well. But starting out, at least my personal opinion is it's best to get really good at one thing to one specific target demographic.
Is there some funny stories, like a buyer, decided to not come to the closing or something like that? Some fucked up stuff that happened?
Well, you never really know with deals. I mean, we've done over 1,500, so I could tell you lots of different stories from deals. But I think every deal is different. You never really know what's going to happen. We have people, sometimes you'd think that people who make like a lot of money are like super happy, super engaged, and like they'll be there. We've done deals where the deal recently, it was $30 million in cash, and the seller had literally no interest, even for $30 million, in working with the buyer after the deal was done. They basically wanted to leave on day one, and there was no amount of persuading that would change their mind. So they got their $30 million, and then they went and did something completely different, and they have no involvement in the industry at all. But I've also seen situations where someone has made less than that. Let's say they make $10 million, and they've loved the idea, and they've gone to work for the acquirer for 4 years, and they've done really well. The business has grown, and it was a really good outcome for them. Yes, we see lots of different stories like that, but you never really know. And everyone's different. Everyone has a unique story. And to my point earlier about if your list of 25 criteria, you don't really know when you're starting out exactly how things are going to end up. Hence why just getting started is a good thing. And every seller has their own story. Every buyer has their own story. Every deal has its own story. A lot of it ends up being confidential, unfortunately. All the good stuff is behind an NDA or a non-disclosure. But yeah, it's always surprising what people exit for lots of different reasons. Some people exit because they want to go build a bigger business. Some people exit because they want to exit and never work again. There's no real right or wrong reason for selling, and people have lots of different reasons.
So approaching the end here, let me ask a spicy question. For someone like you, how do you, where does your net worth or your salary come from? Do you just pay yourself a generous salary? Is it the equity of the firm FE International? Where's your money coming from?
Yeah, so my business partner and I, we pay ourselves a salary in the business. I have a day job. I come to the office every day. Do have a job. I work in the business. I am CEO. So you get paid a salary, and then at the end of the year, hopefully we're profitable. There's then a distribution. There's a portion of net worth is tied up in equity in the business. We also invest outside of it. So a lot of it is we take our profit or take our distributions, and then we invest in businesses in the space. We might take minority stakes. We might invest alongside our clients who are like, hey, I've just sold my business. Do you want to invest alongside us? So we've always invested in the industry. And then I guess like a lot of other investing outside of that. So like buying real estate, buying stocks, buying bonds, whatever it might be, sometimes just cash. I think having cash is important. But yeah, I think if you're building a business, you have to accept the fact that the majority of your personal net worth will be tied up in your business. And if you can get cash out of the business, you probably still want to stay in a similar industry. I'm not necessarily a big believer in diversifying from that perspective. Yes, diversification can be important, but I think actually building a business and you're going to work on it 100 hours a week or however much you want to work, I don't really see the problem with most of your net worth being tied up in that one thing.
How can you throw out like a number or something? How would you value even something like Effie International? Is that worth like 10 million, 100 million, a billion?
Well, I think you could look at what other, without giving exact numbers, you could look at what other investment banks are valued at. So you could look at like a JP Morgan. What do they trade for on a multiple of earnings or net profit or whatever it might be? And then you can generally apply that to smaller business as well. And also if you think about it, a business like ours might sell to a company like JP Morgan because they might say, hey, we want to do more deals in the SaaS space. How do we do that? Why don't we acquire the company that's the best M&A firm for small SaaS companies? And again, they would probably say, well, if we're trading at this time's earnings, we can pay whatever amount they're trading at earnings to buy Effie International. So that's how I look at it, at least. And I think that's generally the best way to value any business, is like, what is a similar business trading for? And a similar bigger business is probably the one that's likely to buy you as well, or it's at least an option. I think in almost 100% of deals we represent, one of the first buyers we contact will be a much bigger competitor. And almost every business in the world has a bigger competitor. Unless you're, obviously if you're someone like JP Morgan, that's not necessarily true, but small banks have bigger competitors. In your HVAC example from earlier, there's an HVAC company out there that probably owns 1,000 kind of regional offices or whatever. In any industry, particularly in the US, that will be true.
Last question. What do you think are the benefits of working for a firm like yours, which is like a boutique firm, let's say, as opposed to some graduates, the standard way would be to try to get into bulge bracket banks, for example. What are the benefits?
I think the reason people like working at Effie International versus, say, Goldman Sachs is they'll work on more transactions, they'll have more deal exposure. Because we're a small firm, we have to do lots of deals to kind of be profitable and be successful and build a good reputation. If you're Goldman Sachs, maybe you can do, a managing director might do one deal every 3 years. Yes, it could have a huge fee. We do much more than that. We're doing deals constantly, so you get a bit more deal exposure. And I guess because we're growing and we're growing so fast, we're kind of changing the industry. So if you want to work hard and you want to make a difference, then a small growing firm can be good because you get a lot of exposure and you can grow with the firm. If you go to a much bigger business, you could be the smartest person in the world and go work at Goldman Sachs. You're still an employee as part of the wider business. You probably can't make that much of a difference or really change what's going on there, regardless of like how good you are at your job.
Thomas, that was very fun. Where should people check you out? Is there some way to learn more about you?
Sure. I mean, I think we've mentioned all the different social media channels. You can find me on Twitter. You can find me on LinkedIn. Find me on Facebook. On the Effie International website, we produce a lot of content in different mediums. We have video content. We have written content. However you like to consume content, we have it. And if you're smart and you can find my email, feel free to shoot me an email, mention you saw me here, and I'll reply personally. But yeah, more than happy to speak to you all. Hopefully this is helpful. Any questions, more than happy. Or if this is on YouTube specifically, write a question in the comments and I'll check it out and reply.
Cool. Thank you, Thomas.
Thanks so much.